Hello and welcome to yet another week. And this is the last week of the month. Last week we saw quite some high impact news, especially on Friday. But the entire of the week we had the CPI for card, we had the bank rate for NZD, whereby they were able to cut their rates by 25 basis points. We saw the CPI for the UK become stubborn from 3.6% to 3.8%. The FOMC meeting were a bit meeting minutes. They were able to shed light in terms of a very sticky inflation. And on Thursday, we were able to see the PMIs, both from the Eurozone, the UK, and the US. And on Friday, we had quite major key data, whereby we saw the Fed chair, Powell, speak at 5 p.m. in the Jackson Hole Symposium. And the tone here was dovish, with the likelihood of a rate cut come the September meeting. And we were able to see a lot of the dollar weekend, equities were able to gain some momentum. We were able to see gold also appreciate as a result of the news. And yeah, it was quite. Also, the indices were able to react the same, and we were able to see quite volatility into place, right? So when we look at the stock indices, maybe to mention, we were able to see the US stock market rebound on Friday, especially reacting to Powell's comments. And maybe to touch on Powell's comment, he signaled a downward or a downside employment risks shaping decision. All right. So right now we are talking about 85% chances of a 25 basis point rate cut, which is priced for September. Right. And this has increased from the previous 65% now to 85%. Okay. So, but still we are looking at the September 5th, the payroll data, which will be very significant, and also the September, the August CPI data, which will be released also in September, right? So they'll be very significant. And also this week we have quite a major data that we are looking at, which will be very significant in terms of shipping, which is actually a very good data, or a very something that the Fed really likes to look at to determine the whether they're going to cut the rates or not, and that is the core PCE price index. It's very significant, and that's actually the key data of this particular week for the USD. Apart from that, on Thursday, we'll be having the prelim GDP quarter after quarter, right, for the USD, so which is also going to be very critical. And we have unemployment claims also for the USD on Thursday. So those are the news that we have for the USD. And maybe to mention for other pairs, today is on holiday for GBP. We will be on Wednesday be looking forward towards the CPI for AUD. All right, for Australia, they are looking at an increase from 1.9 to 2.3. So we have to wait for the actual. And then on Friday, we'll be having the GDP data for Canada, right? So those are the economics data that we have this week. So it's quite a more technical week per se, and the only major data that we'll be looking here is the core PCE price index, which is on Friday, and we anticipate some quite volatility with this data, depending on how the actual is going to vary from the forecasted and also the previous data. Okay. So real quick, today I'll begin by looking at the dollar index. Remember, it's a new month, all right? So this is the dollar index. I mean, it's a new week. And also the reason I'm looking at the dollar index is because of the Jackson Hole Symposium, whereby we were able to see the Fed chair, Mr. Jerome Powell, give quite a very dovish speech in terms of the rate cuts, and now the markets are pricing at 85% for 25 basis points cut come September meeting. So when you're looking at these, we saw last week it was bearish. The dollar index lost a lot, especially on Friday. And you can see from the weekly time frame, we are still looking at bearish sentiments. All right, we are still looking at the bearish sentiments. Remember our objective sometimes back was the price to come to this level 97, whereby the price reached. But now from these particular data, what we can see is that there is a likelihood of the prices of the dollar even coming all the way to 90, right? Because these are the daily time frame, this is the weekly time frame, okay? But of course, the first point of interest we'll be looking at is about 96.37 there, because that's where we have the sell side liquidity. All right, so this is the level that we have on the daily, on the weekly time frame. We have the sell side liquidities at that particular point. And as you can see here, this is quite a good trend. The price has been pushing lower, creating lower lows and lower highs, and therefore sustaining through that bullish, bearish momentum. So when we come to the daily time frame, all right, we see quite significant data here, or significant moves. So we have been seeing this trend line which has been supporting the dollar index, right? But right now we see the price breaking below that trend line and also creating a bearish engulfing, all right? Meaning that we might be able to see more lower prices at this particular point, okay? We might be able to see more lower prices, and we'll be looking at these bullish engulfing in case the prices pushes up. We want to see how the price will react from this bullish engulfing, because it has a potential to push the prices lower. But in case we see the price break above that bullish engulfing, then we'll be talking about the price coming to this other bearish engulfing here. All right. So if this bearish engulfing fails, therefore the next point of interest will be the dollar index coming to this daily bearish engulfing. But right now, our key point of interest is at this particular point. The trend line has been broken. This was an up trend line which has been holding prices higher. It has been broken, and therefore we want to see how the price is going to react from that particular point. So when we come to the 4-hour time frame, we are seeing that bearish sentiment, or the bearish momentum. Still, the trend line here holds very, very well. And what we have here, here we were seeing price create higher highs and higher lows. So we already have a change of character, signaling even more bearish prices, right? And now from the daily engulfing, we might be able to have maybe price in case jumping all the way to this particular level, as it feels this imbalance, basically coming to this 4-hour OB, and therefore we might be able to see some selling pressure, or sellers trying to exert pressure from this particular point. So above from that, we still have this one. We can minimize this to the 4-hour engulfing, all right? The 4-hour bearish engulfing, which is also the 4-hour order block. And from this particular point, that is in case the price fails to sustain this level, then the next level we might be seeing price come to is this particular point. So that's what we are watching for the dollar index. So buyers is bearish sentiments, but of course we anticipate some bit of a retracement maybe to these levels before we continue seeing more bearish trajectory. All right. So let's now jump to gold. And for gold, I'll begin from the weekly time frame. So from the weekly time frame, we have been discussing about or looking at a bullish peanut. All right, we have been looking at a bullish peanut. This particular trajectory here, all right, this particular trend line, and also you can see the price has been consolidating within this particular bullish peanut. So with this particular bullish peanut, therefore, what it insinuates is, as the name suggests, is a bullish peanut. We might be able to see price push on the upper direction. Remember, right now we have quite a very bearish dollar index, and therefore, if the dollar index is going to sustain the bearish momentum, therefore that will be positive for gold, and we anticipate gold to continue pushing higher. So what we'll be monitoring from the weekly time frame is how the price is going to react all right, from this bullish peanut. Are we going to see the price break above this level? And if that happens, then what it means is that we might be coming to these particular levels, all right? That is where we have the all-time high at around 3,500, all right? The all-time high is at that 500.20. Okay, so we can adjust this. So that will be 3,500.20, and this is that 500 0.20. So are we going, the question here that traders are asking or investors are asking, are we going to see gold create another all-time high? All right. Will this happen now, or maybe probably before the end of this month, or maybe probably next month? Remember, if you are going to have a rate cut again, that will be positive for gold, and we will see gold really gain buyers coming into place. All right. So that's the key thing to watch. So when we come to the 4-hour time frame, all right, I mean from the daily time frame, we are still seeing that particular bullish peanut, right, which is holding prices here, and what we are seeing from this particular point, maybe we can, yes, that we can just leave that there, and then we can maybe probably be able to, from this particular point to this particular level, we still see the same trajectory. But what is of interest for me is you see the engulfings, because these engulfings, they really create supplies and demand. So here we had an engulfing which acted as a demand level, and we saw the prices push up. Here again, we are seeing another engulfing that the price has created. Remember, we had a very bullish Friday yesterday, and the reason why we have a very strong bullish candle here. So the price has created another engulfing. So the question is, the key point of interest is, will the price, once the price comes back to this level, are we going to see the price hold from that particular point and prices go higher? So higher chances, we might be able to see more bullishness for gold, but maybe probably a retracement to this level, trying to cover up the imbalances that the market created on Friday, and then now maybe probably before the price rallies. So when we come to the 4-hour time frame, we are able to see that very clearly. So we can use the 4-hour OB also, which I would like to mark it as the 4-hour bullish engulfing. Okay, so when you look at the 4-hour time frame, already at this particular point, we had seen a change of character. All right, the price had created a change of character from this particular point, and from that level, we were able to see the price come all the way to these 4-hour order block, and then now we saw the price rise on Friday as it was reacting to Powell's speech, and also we saw Trump come in at about 8:05 our time, whereby he was able to give a speech on also in the Jackson Hole symposium. So what we witnessed on Friday, the price rallied all the way to these levels, taking out the liquidities here. That is the buy side liquidities. All right, the buy side liquidities were taken out. Of course, we anticipate some bit of retracement, and what I'm looking forward to is if the price of gold is going to come again to 33.29, then these will be key levels for us to look at buying. Remember, we are looking at the weekly overview, or the weekly breakdown, or the opportunities that we might have this particular week. So maybe it might not reach to this level today, but maybe probably within the week, we might be able to see maybe gold come to this level. And the moment gold comes to this level, then we will be eyeballing some buying opportunities. Why? Because you can see this is quite a clear structure that the price is making. So now we have another we have a BOS at this particular point. So after the change of character, the price retesting the order block here, we saw that impulsive move. Okay. The reason why I say sometimes fundamentals come to complete the market structure, or to support the market structure, and sometimes they can go against the market structure, because even technically, this is the level that we were looking at for some buying opportunities. So then what I'm anticipating is a scenario whereby maybe probably in case the price for gold drops to this level as it feels the imbalances here, then we might be able to see the price push up again, some bullish sentiment. Remember, from the weekly time frame, we are bullish. From the daily time frame, we are bullish. And from the 4-hour time frame, also, we are seeing some bullishness, okay? So when we go to the 1-hour time frame, all right, when we go to the 1-hour time frame, we are also still seeing the same sentiment. So this is a change of character also from the 1 hour time frame. The price retracing to these particular levels and then pushing higher. So also taking out the liquidities here, and also as it respected these engulfing. Do you see here why I say the engulfings are quite significant? So it took out the liquidities there as it respected that engulfing, and we are seeing some push on the downside. Of course, this is anticipated. These kinds of moves are anticipated, as even we want to see the price cover imbalance. All right, the imbalance that was created on that particular on Friday. So today, what I'm looking at, or maybe probably what I'm trying to project here for this particular week, is we might be able to see the price of gold doing what? We might be able to see, let me mark this clearly, because these are very key chart patterns that always give us clues in terms of what we anticipate the price is to do. Okay, so this is a descending channel. This is a descending channel. When we have an uptrend and the price creates a descending channel, then higher chances that we might be able to see a continuation of the trend. So, which is the prevailing trend? Even from the 1 hour time frame, we are bullish. Okay, we are bullish. We are in a bullish trajectory. So weekly time frame bullish, monthly of course bullish, weekly bullish, daily bullish, 4 hour bullish, 1 hour bullish, right? So the reason why our anticipation is for the price to continue with the bullish trend, and that's what we will be looking at this particular week. So when we look at these particular levels, these are key levels that are communicating something here, because we saw the price really consolidate at this particular point. All right, we saw some bit of consolidation from that particular level. So I will be regarding now once the price comes to, or once the price breaks above this. So we see the price coming here also breaking above this, and the next level that we'll be looking at is the price coming all the way to the 3,400 levels, where we have this particular zone. All right. So then for entries, we can go to the 15 minutes time frame, and now to look, try to look at the structure that the market is going to give us. All right. So here we can be able to minimize our risk to the 15 minutes OB. If the risk here is quite big, then we can be able to go to the 5 minutes and try to minimize the risk. So what I'm anticipating, maybe probably the price to continue trading within this particular channel. All right. The price maybe might continue trading with this particular channel, and or maybe probably we might see the price break above this particular descending channel, coming to this level again before maybe we see some push on the downside. But this push on the downside will be basically trying to fill the imbalances. So remember, the imbalances, sometimes they are filled fully, sometimes they are filled just 50%, and then the price continues in the direction of the trend, right? So that's what I'll be monitoring. So in case the price comes to this level, definitely this is a buying level. This is where we have the demand level. This is where we have the bullish order block, and therefore buyers or institutions will be looking at executing some orders from this particular point. But in case the price pushes up and doesn't maybe probably revisit this level that we are talking about, then we'll be looking at a break above this point, and of course now a retest, and now taking the prices all the way to the 3,400 level. So remember, the buyers is bullish. Even from the 15 minutes time frame, we are seeing a very strong bullish trend. Okay, so that's what we will be looking at. Again, remember, it's on a Monday. We might be able to see quite a slow day, because on Mondays we don't really have quite high much volatility, and also the reason why we should be very cautious, because on Mondays again, what happens is a lot of manipulations. So we might want to watch the price action of or how the price action comes out on Monday, the kind of price action that we have today, and then now maybe probably from tomorrow we start looking at some maybe probable setup. So this week I'll be going quite slow, because I have already achieved my monthly targets in terms of what I target monthly, and therefore I'll be going very slow in terms of trading, again being the last week of the month. All right, so remember, we still again in very dovish sentiments, also looking at the higher chances of a rate cut in September. The market has already started pricing itself in that particular manner, we are seeing a weaker dollar index, and therefore we might be able to see a bullish gold even in anticipation of the rate cut by the Fed come the September meeting, right? So with that, keep abreast in this channel. I always post every day the gold sentiments, what I see, what I think of, and also, apart from that, I promise to share why I trade gold and the key things I look at trading gold. And that's a video definitely that I'll be doing, that will be coming to you, so that at least you can be able to read my mind and be able to understand what exactly do I look at, right? What exactly do I look at? Remember, it's not about giving signals. It's all about you understanding the concept and being at a point that you can be able to trade by yourself. You can be able to fish by yourself, all right? So with that, ladies and gentlemen, I wish you a very blessed week ahead, a very blue week ahead. Remember, it's the last week of the month. Go slow, right? Go slow, that you don't maybe probably see yourself eroding all the gains that we made for the month. So thank you, and remember to stay disciplined, to stay focused, and to always trade with purpose.